Well, good morning, everyone. Hey, it's Shooter Scott Henderson, and we are going to go over in our town hall meeting this morning. Of course, at the end of our presentation, please do review our disclosures. We are looking at an SPY chart, and I'm coming out to the weekly because I want to give you guys a visual. There's different things that I do to get a visual of the symmetry of the tape. And, you would think that these purple lines that I have drafted here are some kind of strategy that just draw a line equally, because notice how they're symmetrical. However, from our anchor point that we used here in March of 2009, these align with either lows or highs at specific points throughout this entire tape. And this is really what I found is there really is not a better way to do this, because then you can get a visual of where breadth is expanded a little bit. Like, for example, between 462 and 530, we had some breadth expansion. However, we came right back in the next band to what was kind of equality from our prior bands that we have as far as these jumps. Now, just using this methodology to get a visual of future price, with the collective of the other technical tools that I use, it gives me a broader picture of what I think is going on here. And the structure inside motive waves or Elliott waves, you have your impulse and your corrective legs. And now I've noted all of our corrective legs here. And, one thing I'd like to point is that we're broadening. Okay, so this still is a little bit of a shallow high that, actually you'd think it was a solid high, but it's a weak high, and this is a weak low. So, the reality is we could take either of these out. I think we do take out this upper band that I have here around, what would it be? Price, just guessing where we'd be at 643. Right now I'm expecting acceleration because I'm looking at these prior pushes, and we are much steeper in our ascent than we have been at any other period in this tape. About the closest is right here during this period. So now I'm going to step down a little bit in time because I want to give you a little bit of a visual on what I see. Currently the anchors I'm using for the SPY are 348.11 and 591.89. Now I'm giving it a little more room than I am the NASDAQ, simply because I think we get another little push here. I think this whole peaking section right here is like peaking drive one. So then we're going to get another one up here and another one up here, which puts us up right around that 683, I think. Now, the crazy part is this goes way the heck out, or could go way the heck out into 2026. However, it could be much steeper and, come in really by March of 26 versus the latter. Now, I don't change my mind until that confirming trend support line I have noted at risk break. It's done nothing wrong, even if it breaks that, until it takes out this gap at roughly 571. That still really hasn't done anything wrong, because we could retrace this. Let's assume this is our low and this is our high at this point. We could retrace all the way back down to 537.16, and the tape has still done nothing wrong, and our bull trend is not broken until we break below these 2 points, which I don't even have noted here on the chart. So I think we push right through the end of July. And it may even extend into August with a look at this tape, because we're having a very hard time finding sellers. So let me jump over to NASDAQ. Did a very similar view on this because I wanted to get the visuals. Now we have a much steeper trajectory here than the S&P. It implies to me that the Magnificent Seven is going to get some kind of bid. We have earnings that's going to be coming up. I'm starting to look at some names that potentially have some significant upside. I think specifically Meta and Nvidia have some upside, but starting from that same mindset, this dotted line here is where I see our trend resistance currently. We've roughly tagged it, we're holding it. Now I expect that to overshoot, and then we get a back test, I would think, to about the 78.6, and then we still keep going. But I think the breadth is much steeper in the potential ascent in the NASDAQ once we find this flag that will build out. Now, I don't think we're going to get back below the 61.8. I could be wrong, but structurally, as I've drilled down on this multiple times at this point, I just don't see that happening. So the anchor I'm using currently for the NASDAQ is 254.26 and 539.58. And I'm really just using my trend support line. I want to give it a little room, as far as the look to the upside. All right, let's jump to our swing trade notes and let's hope everything works smoothly. Now, I was kind of excited about Apple until that tariff news kind of came out, and that sort of stifled my euphoria. Currently, the anchor I would be using if you're in Apple is 164.52 and 194.15. But just the risk of some additional tariffs that may hit Apple specifically really stifles my interest as far as putting anything long on that. So now, yesterday we did put on some mRNA $35 calls. Roughly I'm looking for this 34.91. That's the trade at the moment. I mean, it might push a little bit more than it could because, this is whenever you have a shallow one, quite often 3 is elongated, and then you end up with a shallow 5, very similar to that as far as its look. So, I think that's a pretty solid trade. I'm going to go out to the weekly on this one because I think we do have some significant upside here. This is a cycle low that we have. So, we could push well over $90 from where we are here now. And we're still only looking at 50% back of this initial leg, is roughly where the thought is. So now we had a couple names this week that fell off pretty quick. OSCR, basically it's just gave it up. Good thing we didn't put anything on there. DUL also gave it up pretty quick. So, obviously no entry on that. We didn't have our conditions. TEM also broke down. I kind of like this for an entry, but there's some better looking names, so I don't really want to chase the weakness at all here. I want to chase strength. Now, team is working. I've moved the anchors from 113.86 on the low and then the 209.08. Which basically I'm going to the bottom of this general. I'm giving it a little room. On our next candle, we get broken up. Obviously you can move your stop up to the base of this wick off candle here, roughly about 216. So we'll have about a $6 move to the upside, I would think. As far as that, I don't see this slowing down. I see it accelerating. We get to the 382, might get a little bit of a pushback. But I'm still looking for a pushback to 266 on this. I like it for, a continuation much further to the upside from where we are. All right, looking at sound. Now, I jumped on board with this volume candle, sold some covered calls. I'd wanted to put a piece on. We were into the gap. That was sort of my thought. I think we just continue here, as far as, our numbers. I've got some targets up here at 1607, 1659, 1765. But I think we just build out a flag here. And, doing the August gave me a shot to get paid, put some more cash in the account, and just sit in a spot I was comfortable with anyways, because I wanted to build out a position in SoundHound. Because I do think we take out these highs at $25 at some time. So that's my 2 cents. All right, looking at American Express. Now we're getting a little bit of a back test here. Now this is one of the trades. I'm going to try and put a few of these out a week, or as soon as I find them where they look good. I don't want to put anything out unless it looks good. We have bank earnings coming up. AEXP is the 18th, so it's right around the corner. By the way, I also like JP Morgan as well as Goldman Sachs. They pulled back just a little bit. I'm not going to go through their charts today, but I like those into earnings as well. I think the banks do well on earnings, so that's sort of my mindset. But, ultimately selling a 300 or 305 cash secured put here, I think we're going to push back above towards this 332 into earnings. So I think it's a pretty safe bet. Well, for those of you who work and don't have time to really follow a trade kind of thing, you can put a good to cancel order in and next move on. Now ONDS, we have covered calls sold on this, both sides $2 and $3.50. It's just doing what I figured it would do, building out this upper flag here, sort of like this kind of noise we get here. We wicked up above it. I was hoping it would continue a little bit more, but I'm actually glad I sold the calls because it turned out to be the right choice. Now Cava is just a beautiful looking chart. This is, you're continuing to scale here. I just highlighted some ad lines here. We've just broken above the 88.66 this morning. So I would say at least be at a half position size. And truthfully, you could even be at a full position size here. Or you can wait and add at 93 and 98. And then, we're looking for a breakout up here, back testing the 382. I think we get back up into this band because there really is just no resistance once this gap gets filled. So once if we get a rejection, it'll be right here at this 110, which is still a decent trade. I mean, if it's going to reject and that's where we end up getting stopped out, hey, that's what it is. Grab, same scenario. We bought at 495. It's basically been sitting right there. We sold the $5 covered calls. Again, just a way to grab some cash on, again, put some money in the account, sort of a safe way to play it, because again, I think it continues to grow. They have some decent expansions in their marketing, which is really good. I sort of look at Grab as very much like him, as far as the thinking on the structure of the company, and I just like those kind of asymmetrical consumer trades right now where it becomes the trend, where people use it on a regular basis for whatever reason. So that's my thought. All right, now going to Hyatt, just done nothing wrong since our alert. Just continue to tighten up here. I'd move your top anchor up to 144.04 now. Just as, off of that unusual buying, insider buying. It turned out to be a great signal here. It was just unique enough that caught my attention. And actually, I'm kind of surprised Constellation Brands is still held up. I mean, it's done nothing wrong. We had this nice pop recovery. I've used my anchor now at 159.35 and 169.12. This is flagging. So, we're going to have a measured move equal to this 159 to this 175, so about $17. So it should put us up to a little bit above the 618 fib, around 185, I would think. However, if you do get stopped, in my insanity with stops, the best traders I know or have known are the guys actually that just are nuts about protecting their cash and their book. I mean, they have a set process they use. A happens, I do this. B happens, I do this. C happens, I do this. And they don't change that methodology until there's a reason for them to do so. And really using my stop structure, that's really what this is. This is an anal way, for the lack of a better word, to really manage your positions in a micromanagement kind of way. And I know it's hard for some folks to manage this, especially if you have jobs, but structurally the idea is to be able to come in, set your stop. It takes out 50% of your position size. You're still holding half. And until it shows us that it wants to continue, we don't add anything back until it breaks above our prior high. And that really is the structure. So now looking at HIMS, still in this box here, I would have never, when I was up here and this trading got stopped, sold my $60 covered calls up there. We've since rolled those down to 45s, and we also sold some $45 cash. So I'm sort of boxed in. But my BE on this right now where we are is like 41.83 from this whole structure of the trade. And I'm just including the covered calls. I'm not including the gains that we got from down here at $38, where we entered initially on the trade. Now, today, I'm not going to go over what is closed. I made note both last week and this week in the Stocks in Play publication of what closed and what was stopped. If I'm not, honestly, there's just a large number of stocks for me to track here this way, and it is a lot of work, so I'm going to skinny that down just a little bit and not go over the names that have been stopped out unless they were specific for some reason this week. All right, now looking at Big Sky, I would start taking some profits up here. Reason is we got this wick off up here at this 22. I mean, we pushed way up to 24.88. Wicked off. Now we're putting in an inside bar. It's flagging. If it's going to pull back, it's going to pull back to $19, and then I would think about buying it back. But if you haven't taken some profits, I would do that here because I do think that we're getting a little overdone. Not only that, my projection is only up to maybe 25 to $28 if it does get up there. So there's absolutely nothing wrong with taking some profits here. Now let's look at iBet here. Now, the one thing that, I go back to M2 Money Supply and I look at that and, not that I disagree with Kirk, it's that my view is that it's all-time high. We've never had more money circulating in the market. And that is always filtered back to crypto. But the question here is, why are we not seeing a huge rally with that amount of cash coming into the market or in the markets or in play in the markets, however you want to look? So that I look at as a little quagmire right now in Bitcoin or really other crypto because, it implies to me that we're running into significant resistance here. So I wouldn't have a problem if you started to trim. Now, if you didn't take profits over here at 61, because initially our alert line would have been up here, right? I just moved this back and I'm using this higher low as my next anchor, just for those of you who are in it. So you can even tighten that up a little bit more and go up to this 59.87 is your second anchor. But it breaks below that 56.63. I would be cutting my positions pretty aggressively, because then we probably are going to come back and back test this shelf right down here around 52 or 53 bucks as far as IBIT's concerned. So that's just my thought. All right, let's look at T-Mobile. Now, actually, I got an alert this morning that we broke trend, or at least where my anchor was at 230.72. So now a wick, just as the alert, doesn't necessarily, we need to close below that line. So we close below that 233.50, I would be down to 50%. If you haven't been stopped out by using my system up here, because obviously you should have been at least at this 238 as far as your trailing stop, if you used my anchors that I suggest, which, by the way, I highly suggest that you use them because they do work. All right, let's look at FDX. Just a slow grind. You know what I like, looking at CAT and looking at Deer, I would think that FedEx would be running a little more here. It's done nothing wrong from the entry we talked about, because, our entry was down here at 222. It's just been a slow grind working its way back up, and I think we do get back up to that 258. 27. However, coming into earnings, I don't know that I would be holding this. I think I would be trimming. All right, let's look at Joby. Now, right now I'd be using 1080 as my second anchor and 496 as my first. So it's done nothing wrong. If you were taken out, because I do know some of you held it, our entry was down here at $8, kind of worked up here and got stopped out at 942, etc. When you have this much noise in the tape, it's hard to stay in it. Unless you're running some pretty broad stops. However, I do think we're right at about where my first target was. We probably will push higher here. 1618 is my next target up here at 1495. So it's done nothing wrong structurally. Just looking at this, I'm seeing like this is mound 1, this is mound 2. So we're going to put in a mound 3. So I'll be interested in getting back in around $9 or $10 when we get the pullback, wherever that might be. And then I might chase that again, but probably not, because I've got better setup for the longer term. All right, let's look at SNPS. Now, we've done absolutely nothing wrong. I'd raised my anchor to 534.34. Our initial anchor was 365.74. So, it's just been working. Now, Unity just came back, stopped me out of my 25s. I had $25 calls, and then I have January 45. It just stopped me the heck out and then kept going. They're just enough. That's par for the course. This is pretty aggressive, as far as a drawdown. Again, this is another noisy tape. It's hard to stay in, but it's done nothing wrong. I think longer term, we look at Unity, I still like it. As we're going to get back up to this resistance at $39 at some point. Right now, structurally, that's what it's telling us. And then it's probably going to continue to all-time highs. So, keeping some kind of position on in Unity at this point, I think is important. Okay, let's just go through any yellows I didn't cover. All right, let's go to HNG. I'm going to have to go down to an hourly on this one. I actually, in other market conditions, if we weren't so elevated in price, I actually like this for a long off of this low. And if we look what it did this morning, it ran, $1.50 at the open. That implies that, so I think we got a shot at least back up to $50 here. I mean, those of you who don't have a lot on, it's not a bad trade. You could sell $41 cash secured puts on this as well. And I'm looking at it where, maybe our target at some point is 58. The only thing is I do not plan on adding any longs this week unless something really sticks out. I'm just going to stick with my 3 to 5 to 8% a week grind, and that's what I'm going to stick with. I look at this as a little more risk. So if you're less risk adverse than I am at the moment, this is something you could throw on. Now MP, we just absolutely, if you'd taken my stop up at $36, it was dead on. We've pulled back here. And actually I'm a little surprised with the copper news that this hasn't gotten a little bit more of a bout. but it looks to me like we're going back to test this shelf. Then I may get interested in reloading around 25 bucks. Now, Aviv, the stop anchor is roughly at 187 as far as our second anchor here. I'm just noticing I didn't update this one. So, your base anchor would be 176.57, 187.84. I'd probably take profits if I'm stilling this from the breakout we had back at 186. I mean, it's not a huge trade, but if you're still in it, I'd take profits on it. IoT just has done nothing. We're stuck in this flat. I've lost interest in it until it gets back above this 40.55. That's sort of my look. Now, we had some folks that wanted me to go back over QUBT. It still has done nothing wrong. Second anchor is 15.50. I'd probably take some profits here if you're in the money. It's nothing that I have a position on at the moment. And a lot of it had to do with that wick off here. So that's my thoughts. QBTS, are coming out to my 4-hour. Looks like I don't have my anchors on this as well. I have the line there, which is good. That means I at least looked at it. All right, so I would use the 480 and the 1383. But again, I think I would take profits here if I was in it, only because, I'm pretty candid when it comes down to raising cash. I think there's too much of an issue with Japan and the yen carry trade coming off, and that's a catalyst I don't want to be on the wrong side with. So I would rather be light here than heavy. All right, so let's take a look at some of the names everybody wanted me to look at. So ENVX, this 161.8, we're above that. So next target really is going to be the 2618 at 16 bucks. I'm going to come out to the weekly here just to give a bigger visual on this one. So, the structural problem I have with this chart is it's in this prolonged downtrend, and we're tagging that resistance band up here. So if we just look from here to here, we kind of are right there, wicking off of it to some degree. Really, I would say it's more up here. So if we are going to push, maybe to that 16 is be all that I hold. But I just want to raise note here. We got 3 generals. Now, if you look at the MO on this tape, it likes to expand on the upside. So we might get one more general. So at 16 bucks, I'd definitely be taking profits. And if you look at how I call them dirty legs, because there's so much noise, so much range in the candles. It's a very difficult tape to stay in if you're running any kind of risk management. Now, obviously, if you do a hard stop on something like this, from 527, it obviously worked. So, I would definitely be thinking about trimming around that 1660. Now, just looking at the VIX, we're still holding our $50 cash secured puts, and they're probably going to get put to me, but I'm perfectly fine with that. Just factored it again yesterday, looking at it, where I could turn right around and sell some $45 covered calls or $50 covered calls and pretty much end up on the right side of the tape either way. But I think I'm just going to hold those, waiting, because we are, like I've preached before, no matter how low we've drifted, when we get back around, if we get back around 42, obviously I'm upside down probably about $3, but really nothing extreme that we won't recover from on our next drawdown. So that's just my take on the VIX, and that's the way we're playing that. All right, looking at PLTR, second anchor is at 130.54. I would hold with that, and our first anchor was at 592. It was way the heck down there. I would just hold. I see no reason in the tape, where to me, the way the structure's coming in, this entire leg is peaking drive 1. So as long as we don't take out this 119, it's still going to probably go up and give us a second peaking drive up here and a third one up here around 160, 165. So, I think it's got some significant upside. And again, this is one like Unity. I just like it to the upside. I like the thesis. I like the macro. All right, looking at Hood, the second anchor is roughly, we're right at it. I might take some profits on this if I was in this because of that flag. Only reason is we could pull back a decent number from here. I mean, 66 bucks is totally viable for a pullback there. All right, CELH, I would start taking some profits here, only because of the way the structure looks. It's getting done to me. When you have these counter trend trades like this, it's wanning. It's not getting above this 48 buck. It's sort of, I wouldn't say buyer total exhaustion, but we have 4 wicking candles there. It's telling me that the buyers are losing interest up here. And I see this as potentially a much larger corrective leg. So maybe this is our A, this is our B, and our C is going to come way the heck down here. I hope that's not the case, but structurally, there's no reason shouldn't just take profits on this and move on. All right, let's look at AST Space Mobile. And forgive me, I'm just going to clean my chart and start fresh because there was too much noise right there. So we ran to the 100 fib. We're pulling back structurally. We probably have Mountain 2 that we're in here, showing you guys all my secret. Copy and paste wherever you can. So probably the 50% back is a good spot to add something back. 36, 38 bucks, no scale, cash secured puts. It's broken our flag. Or general. So it's broken below here. So structurally, this is a 5-wave down, at least the way I see it. And I'm only on a daily chart, so it's not as accurate as 3. So that puts us right down with equality. I could see that just by looking at it. So that's my thought on ASTS. But I do like cash secured puts at 36 bucks, 35 bucks, 30 bucks even. Once we get back down there. All right, looking at GE, like I mentioned last week, I said I thought that we were hitting a nice flag here. It's done nothing wrong. It's measured move. And we've gotten one measured move off of this leg. Lots of noise here, though. That's the first thing I see in this tape. We don't want to stay in this much noise. If you're in the money and in profits, I would probably take some profits. Then we get back to that 215 or a back test to the low of the flag, 233. Those are the spots I'd be interested in adding something back. Otherwise, I'd be taking profit. GEV, I believe it did trigger what I said my stop would be. So I'd be at 50%, but it has broken out above structurally. Got one more peaking drive probably, and then it is going to come back. I don't know if it goes this deep, but structurally, it may only go 494. But just the thought pattern of a ABC to the upside, I would like it with a pullback to 45 structurally. It gives us a better pump to the upside. But also looking at this prior leg, we have a much steeper ascent than we had here. Then we got this flag and this last push. Then it gave back 50% is roughly, these are things that I just look at or I want to look at. So, it gave back the 618 anyways. So if we come back and we just look at the same weight here and assume that we get that third peaking drive, it's going to come back to 407. That's what the symmetry is as far as my thought there. All right, Clean Spark has done nothing wrong. Anchor is 640. Our anchors are 645 and 1060. Stick with it. You can move up to this wick if you want to, but with this flag look, I actually like this for a push back up to the 1618 down 1580 once it gets rid of this noise. But I think we do get a similar flag as to what we have here. So, and quite often they're stacking. So, you get this copy of it kind of thing. So, you take the lower part of our peak of our tape here. So maybe we get something like this that builds out. So gets back to 1120. Then, if you don't have a position on it, you might want to chase some 13s or 15s. September or October. Let's take a look at Rocket Labs. Anchors are 1471 and 3477. I wouldn't change that at this point if you're still holding. I know some of you got stopped out. However, I still think we get up to that 100 fib structurally, and I'm just looking at equality as far as the look. This is, to me, and I look at everything as an ABC. Any kind of pullback, I don't think it gets below 30 bucks again. That's just my 2 cents. I just don't think it does with this structure. I think coming out to the weekly, the larger noise, 1618 is totally viable on this, 61 bucks at some point. However, it's going to run into resistance like it did here. It will at the 100 fib. That's where it'll do it or start it. May push to the 123 first, but that'll be it. All right, so Circle, we have to come down to a 1 hour on this one because I don't think there's any history on this. Boy, did that stop anchor just absolutely work at 273, huh? I just noticed that I haven't checked this out. Nice base, structurally. I'd be running my anchors off of these lows now. I'm gonna leave those old ones there because it'll take me longer to, so I'd use 64 if I'm in it, and 171 is my anchor. So maybe chase longs above 227. But the phenomenon of the public offering is over. So I have to have a little bit more of a reason to chase a tape like this after the fact. I caught some puts on it. caught some calls on it, sold some cash secured puts on it. It worked. But from a structural standpoint, those of you who want to see what that would look like. So this I'm looking at is our mound 1, mound 2. We will get a mound 3 at some point, just for quick measuring reasons. So it potentially has a shot back at 380. Structurally, not a bad entry, selling some cash secured puts on any back test here. I would say I would like 190 first before I sold any more. That would just be my thought. All right, looking at UUU. Now, I'm really surprised we are not higher than we are today with the news on copper and how the White House is going to try and bring back more processing to the United States. And we're basically giving up price here. So, if you haven't trimmed, I would take profits. The 605 second anchor I noted before prior reviews, I would take some profits on that. Now, ORIC, somebody wanted me to run over. I'd use my 390 anchor and 911 currently. It's done nothing wrong. Heading up to the 100 fib, you got a lot of resistance right here in this zone at 1224. So I would probably take some profits, but I'm just looking at structurally. This looks like an elongated 3 to me. What I mean by elongated, you have these impulse legs that have these real shallow ones, and then this longer 3, and quite often you get a shallow 5, very much like that look. And if that's the case, we'll get an ABC corrective leg right behind this pretty quick if I can click the right piece. So if that's the case, we'll get an ABC, maybe something like this, back to about $9 is what I would think structurally. Looking at Oust, well, obviously my stop worked. When we were up here at 22, you should have been totally out of this thing around 23. I was stopped out of my 30 calls. However, it's come back. So structurally, let's rework this on what I would use my anchor as now. If you're in it still, really with the generals, give it some room, only because it's probably going to be noisy. What I mean by noisy is we're probably going to get something like an XYZ here, building out this flag, something like this is what I would think. So I would probably take some profits up around 25 if I was holding those $30 calls. That would just be my 2 cents. Looking at Sophie, done nothing wrong. I can't tell you why I don't have a position on this. I looked at it God knows how many times, and for some reason I didn't put it on. I don't remember specifically why. Okay, so I would use the anchor of 860 and 1830, but you could push right up to the gap at 1929. It probably fills that gap. Nothing wrong with taking some profits on that wick off, depending on where you're in from, if you're in from 12 or 14 bucks. All right, then I wanted to look at SMC. I think we initially alerted on this at 36, and then we did it again around 43 down here, and we said this thing's going to recover. Looking for the 618 is really what I think we're going to come back to. Just structurally with semis, this is a name that they can't do without this thing. That's just from the infrastructure and putting in the hardware and the processing units with AI. I think we take out these highs 66 bucks. The question is, am I going to own it now or add a position now? Probably not, unless we get a pullback to around 40 bucks. Then I sort of get interested. All right, then somebody wanted me to take a look at A-Lab, and sorry I didn't have a chance to get that one done yet. So we're just going to come in here and tell you what I see. You got your general. That's at least where you want to hold your anchors for your support. So use the 49.47, and then I would use this 66.12. Let me step out to a weekly on this one, because I think it does have some decent upside. Structurally, we're not bullish yet. We're just sort of testing this bottom. So if we just take our first level fib, so we're now looking at a close above 78.6 really before I want to get long. So a breakout above that 85 would give us a target of maybe 112. So, it has some significant potential back to the upside if we are going to completely recover here off of these lows. I'm not recalling exactly why. There's a macro or micro reason it pulled back, doing that kind of reversion to the mean. And quite often what you end up with is a flat. So, and what I mean by a flat is down here, we're going to build this base out very much like, maybe this broad, but we're going to build out a base. Notice this corrective leg and how we built this base out, tested it. Once that base, it has very shallow bases though. So it could be, as I'm sitting here looking at it, just for time's sake, we have a little box here, a little box here it broke out of, little box here it broke out of. So, it does have a short base, structurally as I'm looking at it. So we do get back above that 80, 85 bucks, probably is a good chase up to about 115 in that area, 112, I would think. Now looking at CRISPR, it's coming off this floor. Nice structure actually at the moment. Nice divergence on the low. And again, this is a 5-year trade for me. I just, structurally, I think it's going to completely recover. I still think my cost basis is like 68 bucks, I think. So I'm a little upside down on it. But I like the thesis of mRNA. They're saying we have to make it 5 to 7 years and all of us will live over the age of 100. Now, I don't know necessarily that I like that idea, but that's what they say. Don't know if that's going to be the truth or not. But, so, target back here, 50% back is roughly going to be 134. So it's done nothing wrong. Full position size really on a breakout above 59 again, if you were going to add to this. Let's look at Intel. Similar look. Heck of a broadening. Nice hold down here. I'm just structurally looking at this. So our fib as far as, 51% back or 50% back at about 31 bucks, I think is totally viable. Full position size above 26 bucks. I like it there. And I believe I covered everybody's name. Did I miss anybody? That was a pretty long list. Anyone want me to look at anything else? Well, we're here. AMTX. Yeah, I did miss that. AMTX. NFE. I deleted that from my list. All right, let me come back to the weekly. Now, 50% back is 14 bucks. Structurally, literally, if we look at this as our extension of here. It has that. There's a lot that's going to happen for us to get up to 44 bucks, but equality to me is right here. Reason is because that's the structure and how the drives have just continually pushed. However, it really, until we get above like 550, it's still in a bearish correction. And that's the challenging part here. However, we've broken the internal trend resistance line here. If we just run off of our, we've popped our head above it now, which is positive. That's structurally sound. So as long as that holds, and I'm just going to put an alert there on my trading view for my reference, until that breaks black below there, so, roughly about 245, 250, it's still done nothing wrong. However, I wouldn't blame you if you've been in from $1.95 to take some profits up here, simply structurally. Now, I broke that down in chat, as far as how you could sell covered calls, turn around and sell cash secured puts, and it gives you a cost basis of about 250 if my memory serves me correct. That way you could potentially keep a position on there. Let's take a look at NFE. So right now I'd be running that 2 anchor and that 3 anchor because it's still really done nothing wrong down there. Nice divergence for a bottom. It's got to get back above this 737. It's, if not, it risks being a slow bleed. And that's the hard part about a stock that's already broken below its prior shelf. This whatever that was, whatever that launch shelf was that occurred over here, this flat. Once you break below that, this is your foundational structure for this entire move. The fact that it came in, peaked, put in a lower high, another lower high, another lower high. The problem is what I see in the mound structure to the downside. So, this could continue to bleed lower. When I'm looking at this, if it's going to become an impulse, we could do a third much lower than we are here. And it will build out a base like over around here. Something like this. And then maybe not that steep. And it could be shallower because, it's already starting to slope up a little bit. But, I would still think that we would at least test a buck, right around that range again, if it's going to continue lower. And it may become a penny stock again, just structurally. Just how a mound works to the downside. That's sort of my thought on that. And CLS, I'd be tightening up my stops, that's for sure on this one. But structurally, I'd come back to my wick, even though it's gapping to some degree. I'd use 58.05 and 144.27 extensions on this one. I'm just going to measure this leg here. 1618 is viable at 225. It's already at the 100 fib. So whatever this flag comes in at, I'm going to come down to the 4 hour on this one. I'm just trying to see structure. So we got like mound 1, mound 2, kind of mound 3. So it's extending. Usually you're going to get equal to this to there. So, which they can, when I say 3 mounds, they come in 3, 5, or Elliott Waves likes 3, 5s, and 8s. So when you get an extended or an elongated move, so this would be an extended move, and you could still get that elongated move. But structurally, the symmetry is still going to stand up. So, the best way, you could literally move the stop up to that 144.84 if you wanted to. But I would, depending on what my entry price is how I would manage that structurally. But so, I think we got a shot back on the extreme side, realize that's going to be 8 to 12% of the time we're going to get that kind of extension in price, but it happens with a taper. And now if we come back and we look at our impulse from this leg. All right, folks, it was nice. Great trading. Until next time.